right, traders, your market outlook. We're going to take a look at key price points across the indexes. We're going to start off right here. Yesterday, we identified support and resistance levels in the Dow Jones 1250 tick. We were talking about previous structure support. Right there again, there's the cluster 2. So by definition, apply your IS indicator. Cluster 2 means we've got a turning point followed immediately by a black tip. So that's 2 bars back to back. Take that swing low right there, and then once we've broken that support, we decline rapidly. There's another turning point, black tip, 2 bar, and again, I want you to note this pattern. So those of you that are on trial, make sure that you're looking at these setups and signals and look at the conditions. Number 1, RSI's buried, oversold, SOS1. Take the left side right here where this market finally stops the decline, and then look for a retest of that level. So again, what's great to do, just from a classic, what do I see? What does it mean? What do I do? I see this turning point black tip with a buried RSI. It means that the market's hit a short-term point of exhaustion and that this area is likely to be future support. What do? I look for the market to come back down within 18 to 30 bars. Okay, so this pattern right here from the lowest low where we finally stopped the decline, this is bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars later we retested those lows. So that's a 12 bar pattern. 7 bars up, 5 bars back down, produce that symmetry. I drop the horizontal line in right here, and as you can see, I typically crop the wicks. So I drop it in right there at the base of the candle. I discount the wick because the market opened, drove, and then closed higher. Now, I remember we've got to respect the wick for the value of the protective stop. So we've got to look at this dude right here and say, okay, we got to go below that swing low. The market will test it again, as is evidenced by this guy right here. So we rolled right down and we tested. That was 16,632. This guy went to 625. So it's imperative that we respect that structure. And a very, very simple rule right here is to look at the average true range of the market traded, take the absolute low, and then subtract 1 ATR as a minimum. All right, bottom line is, right here would be the buy signal. And yesterday in the Nasdaq, we saw the importance of having limit orders resting. And then we also took a look at adding the additional filter. Right here, 645. We got a pop right here to 692. So a quick 40 to 45 point move. Then we come back down and retest, not trading below that swing, not trading below that swing. And then here we made a new structure high, and this closed above this previous swing high. So here it is, higher high with higher close. Okay? Then we pull back down right here. Now I want you to note the time between bars. This is swing low. 12 bars later we test. And then 9 bars later we test again. Beautiful triple bottom. When this guy comes back down right here, this trade, gang, is more aggressive. Now we can still take a look at buying this based on this reversal pattern. Here is a beautiful hammer. This guy stops on a dime, pulls all the way back up, and then we get a higher close on the next bar. Nice buy signal right there. And we'll discuss that more in training. Okay, turning point black tip, there's a 2-bar cluster. Now this guy gains some relevance for me for structure. We pull back, there's a turning point, RSI's buried, SOS1. Turning point, SOS2, 2, 3 bars, so that's a cluster 3. There's the signal, long entries on the next bar. 674, an easy move to retest this for 720. So again, there's a quick 40 to 50 points. Over and over and over. There's the turning point black tip sell at previous structure support, anticipated resistance with the overbought RSI. Then we get the news. So here was our last sell. We discussed this yesterday, real time. From that short entry, target 1 easily attained, came down here just shy of target 2. Here is an extreme oversold, SOS1. Turning point, SOS2. Black tip, SOS3. There's a cluster 3 buy more aggressive because we haven't come down to that major price point. And then here is the Fed. So again, we anticipate volatility. If I don't like to trade volatility, then I need to be out of the market. This is a 1250 tick chart. Right there's 1 o'clock, and things finally slowed down a little bit at 1:15, so a 15-minute window where we saw a lot of volatility. The lowest low was 650, the highest high 750, so it traveled 100 points right there in about 4 minutes. And again, the initial reaction, bullish, then came back bearish, then went up, hit our highs. I did not take the sell right there. It's too early after the news. From there, though, we declined a full 75 points before we rallied, and now off to new structure highs. So our previous structure resistance, once broken, new high, anticipated higher low, where might that higher low exist? Look left. Now again, I'm not telling you to trade this pullback and buy this level here. Again, it's 30 minutes, 40 minutes after the Fed. But you can see that that level still respected. We'd had a lot of price action shown resistance. We started back here, your turning point black tip, 1, 2, 3, 4, 5 rejection, broken, boom support. And now again, even with the volatility that we saw, swing low to this high. Whoops, hang on. There we go. Let's expand this so you can see it better. So from this impulse, we go to a new structure high, followed by this higher low. Let's drop this in. Where would AB equal CD? So that projects to 16,870s basically. Our highs so far, 830s. So high probability we'll see the 870s to 880s right here. And then we'll start looking for continuation moves. Okay, so again, there's the Dow Jones. Everything that we looked at, now we've got new levels that we want to go identify. So quickly here, let's walk around. Here's our NASI. September 14th contract. Nasdaq rallied to that big, massive level at 3,800. And again, you see Nasdaq was in a completely different area. Nasdaq was down near our buy zone when the news came out. Saw the same volatility here, but again, gang, look left. See this turning point followed immediately by the black tip? Look left, right there was the previous swing low. Literally, it tested it within 1 point right there. And then just a gorgeous rally out of there. Again, this is very aggressive, but all the components are still present. RSI is buried at 1242. Turning point, SOS2, followed immediately by a black tip. So that's a cluster 2, 2 bars, and then a long entry. Structure was present, and it had us long prior to the news event. Right there's 1 o'clock when the news came out. Respect structure for stops. And then from the 3765s, got to cover partial right there on your swing trade, respecting that structure. At this point, we're overbought bearish divergence, and then obviously gone pecan straight north. So we have traded above, closed above the 3,800 handle. We're hanging out right at that level with highs at the 03. Potential head and shoulders top right now, but they had strength, closed them on the highs, so we'll probably see a continuation move. Okay, so anything back into the 3795s, look for potential long entries. And then I'm going to take the last leg of the move up, give you some perspective. The swing low right here proceeded to drive to this new structure high. So the 1618's at 3815. Inside of this, we had an ABCD. From the swing low, we went here, pulled back to here. The question, if this duplicates itself, where are we going? There's 1-to-1. Then we'll take it, drop it in on this swing low, and that would be 3 drives to a top right around the 1414 extension at 3810. So if I buy 95s, then reasonable expectation will be 3810 for about 15 points or $300 a contract in the NASI. All right, let's go take a look at crude. Move to the August contract. Volume shifted. We went right to my 127 extension we showed yesterday. Nice area of confluence. We had the 127, the 1414. I took this swing to the new structure low. We then inverted this swing here. Structure held, new structure high, and then right to the 127s. So we'll look for the 105.20s for potential long entries. This guy right here comes down, previous support. Once broken, becomes resistance right here. So let's look at a retest of the 105.20s and then possibly new structure lows right here. Now, we've attained our fib extension, our projection. So let's come back here. We had a swing high here and here that preceded this low. So we'll go here, and then I'm going to invert. Right here is a static swing. So the 1618 at 105.04, the 127 of the prior swing at 104.97 equals 40-cent move down to the 105s. Very reasonable expectation. Higher probability we see a 1-to-1 measured move. This guy here to here. The retracement right here is less than the 382 retracement, showing a sign of strength if that swing high holds, which means that we'll project probable 104.60s. From where we're trading right now, that's 1 ATR. Okay, now we got to look, 619, we've already seen a pretty significant move. Highs of the Globex session right there, 625 down to here. We've already seen 100% ATR. So I'll be looking at possible USO calls right here on a retest of the 520s. And then if we break below, close below, we got to be cautious because of the fact that we've already attained basically 100% of the true range on this market. Dow Jones holding, and let's go take a quick look here at the Russell. Gone pecan on the Russell. So again, let's go back to our previous analysis. Everything held as expected. We had the long entry right here. We missed this in real time at the 1166. That was 1014. Not a bad little trade. Retest right here for a quick 8 points. Some of you may have gotten this. And then here we went overbought, bearish divergence against previous highs. Not only did they take those out, but they did so with conviction. So consecutive higher highs, higher closes, all the way to 1182.60s. Now, I doubt that we see it, but if we get the pullbacks into 74 to 76, then look for the long entry. We'll take the last leg up, which was swing low here to this current high. This is still an active leg. This could still go to new structure highs here. So if this high holds and we pull back to here, then we'd expect this leg would duplicate itself. Just like we did right here, we said buy them at 66, cover at 74. So this would be long entries at 75, projections to 87. So if I know 75 to 87 is a 12-point move, then it'd be reasonable for me to place a protective stop below the swing low right here. So it's going to require about a 5-point stop on a swing trade. So my risk equals 5 points or $500 per. And my reward would be 12 points or $1,200 per. So that's risking 1 unit. That unit is equal to $500 for 2.2 units of reward, which is equal to $1,200. Now, would I just place a buy limit right here? Absolutely not. As the market pulls back to here, if it does, then all we do is go down to our trading time frame chart and look for DSR levels, look for our classic cluster 2, 3, or 4 buys, and trade them up from there. Now, we are going to gap open here. It's 829, so it's a slight gap higher. 81.90 to 79, about a 2.5, 3-point gap. So let's see if we pull back, fill that gap, fade the fill, and then this black horizontal line represents that significant structure. Again, this is just a visual reminder intraday. All right, strategies going up here. We had our single trade yesterday in the fib.strat. We got the sell signal right there. Target 1 attained, balance out on the trail stops. Time of day kept us out of the position right here. And again, off to new structure highs. So that's the 1,000 tick chart. Now with the Fed, we're going to need a pullback right here. We could get a qualified sell signal in here, followed by a continuation move. So we'll watch this guy top left-hand side. All right, let's go to our 4 lot right here. Russell bottom left. Russell with the strategy right here, top left. Top right, Dow Jones 150 tick. Yeah, we've got quite a bit of pullback, so we'll see what goes on up here. Completely sideways, pressed against those highs. And then bottom right, we've got crude oil. DSR levels down there at the 0520. On crude oil, gang, any pullback into this 570 to 105.80 handle right there. Yeah, we'll take a look at short entry. So we're gapping lower right there in crude. Any buy signals against the 520s to 530s, then we'd look for an extended target at the gap fill. Here. First and foremost, we just came off of a new structure low right here. And you'll note that we've got the SOS black tip at the absolute bottoms. Number 2, our Big Mo's been in bear continuation pattern in black right here. Number 3, look left, the most recent swing high. Swing strength is set to 8. Okay. Now, what I see right here on this side is a potential ABCD pattern for a qualified sell. Here's A to B, B to C, and then potential AB equals CD right there. And those of you that have taken some of our ratio courses or pattern trading, Fibonacci retracement, this swing high preceded the decline to that new structure low. Take your Fibonacci extension right here, left click at A, left click at B, left click at A. So you'll note right there I've got an ABCD terminating at the 786 retracement, which also happens to be near the 1414 extension. Now let's wait patiently while everything blows up and takes its time so I can pull in the 1414 extension to show you that area of confluence. Bottom line is it looks like a big even handle 1300 potential sell. Now again, this would require stops above this swing high. So it'd be a $20 risk. Doink, doink, doink. There we go. So $12.9960 versus $13.01. Massive area of confluence. You can grab the rectangle, drop it in here to identify where that ratio trade. Now again, we've gapped higher on the continuous contract in the futures market. So if we rally to 1300 futures and get a sell signal, you could come down here, Adrian, and take a look maybe at your 1250 tick and watch for a cluster 3 and SOS 4, and then maybe buy GLD puts. Okay. All right, now let's go back here. Yeah, so pulling in more time just pulled in that bad tick again that went to 0, which completely disrupts everything. So unfortunately, let's go back to our 1250 tick. Yeah, so a big bull move right there, 1295. So 13 to 1302 right here, potential sell signal. But it's just been a momentum play. Once we took out that structure resistance, yeah, I'll have to go to the database and fix it. So basically, resistance at 85, right here, 715. So prior to our news yesterday, we took off, got a $10 move. Actually, that was this morning. $10 move to new structure highs. A key price point right here. Okay, so we pulled right back down to that level, tested the level. We go RSI extreme at the bottom, SOS1, black tip, SOS2, white candle, SOS3. So again, this is aggressive. We do not have a double bottom. Now, yesterday we took a shot at the key price point. That's where market structure broke, and we went to new lows. So here's our DSR level. Look left, 0525s. Now here's a retest with bullish divergence. Now if I'm aggressive, I go ahead and buy the right side right here. That's an SOS 4. Or I can wait to see if we get a white candle right here for additional confirmation. So, boom, RSI oversold, SOS 1, black tip, SOS 2, white candle, SOS 3. Now we've got a double bottom with bullish divergence. There's SOS 4. Now on the right side right here, let's see if we get the white candle for the confirmation. There's a turning point on the right side. We're buried again. Our gap fills right here at 571, so I'm going to go to 64 at about 94% or 90% gap fill. There's the turning point black tip. I'll get aggressive and do an adverse excursion buy here. I'll do a single lot. And again, if they take this support out, we know that this is gone pecan and we're heading south. So I'm going to reduce my risk, tighten the stop here, and then on this one we'll look for a retest right here. So extremely low risk versus reward. All right, off to new structure lows. Now, we've broken structure support, so let's go gain some perspective over here. So there's our new structure low. Okay, so we were looking at the retest of the 525 handle. We're at 100% ATR for the session, and now we've made lower lows with lower close. So I'm going to be cautious on any sell signals here because of the size of the move that we've had so far since the open. Okay. Remember, our ATR in this market's at about $1 to $1.10 a day. We've already moved that from the overnight highs. Yeah, and that extended target is down here to 460. So again, highly unlikely we see that today. That would be about a 3% occurrence. 3 days out of 100, we would go to 160% ATR. Yeah, absolutely. Okay, let's pull this guy back down. TF bottom left, not much going on there. Dow Jones still hanging out at the highs. A little bit of a pullback since that add-on. And nothing going on up here on our FibDots auto strategy. We, again, might get a sell signal right here with a momentum trade. And this is one, again, where we can come in and we can override it. We can say, you know what, I get a qualified sell signal right here, but this is a massive bull trend, so I might exit that immediately after the system puts it on. The benefit of that level 2. Okay, this sell signal was with the underlying trend, black candles all the way down. Now we've gone new structure high, higher close, higher high, higher close. We tested our big resistance level and then took it out and had nice momentum right here. Excursion. So let's take a look at it right here real quickly on crude oil. Okay, so if I did an aggressive short entry with trend, we just came off of a new structure low, lower close. Now if I want to do an adverse excursion, I select a different ATM here. I can go ahead and sell market here. It'll adjust my stops and targets. So you see that now I'm risking 9 to make 7. And I'm actually going to tighten this. I'm going to put it at 47. If it breaks that high, I want out. Now, if we come back here first, then I put 7 ticks in the bank, and that pays for the opportunity on the other contract. If the market continues to rally, I've risked basically 6 ticks. All right, there's a little pop right there. So all flat right there on the aggressive sell. Adverse excursion. So you can, let's just look at it like this. Now here, Dow is actually a better example because of our DSR. So let's pull this down. And let's take a look here. Okay, so right here is our qualified sell right there. Now, from the point of entry right there, then we put a protective stop in. So in this case, we had stops in at 46. I rounded up to 51. So basically that's a 21 ticks of risk. A, the market rolls back over and comes down. Our profit target was at 816 on half, and then we're going to let the balance run. B, the market moves against the position into this static stop zone. Okay, so the static stop zone is the distance between the entry, and this is based on the strategy, and your stop loss. So that's the initial stop loss. We divide this by 50, or by 2 basically, and we take 50% of the range, add to the entry. So in this case, we were short 2. We would add 2. If I add a 50% into that zone, then the stop is 11 ticks, 12 ticks. And then the target, 12 to 15. That allows the market to rally up into the static stop zone, sell them here. Then as we pull back down to the previous DSR level, A, we can take off our adverse excursion, and then I make 10, 12, 15 ticks on the adverse excursion add-on, and now I've paid for the opportunity from my original contract. So my risk here is 22 ticks of risk. Market moves against me, and like we just saw in the previous setup, I add right here. But if I use a separate dissociated ATM, or I just use no ATM, I can sell them here. As this pulls back, I can cover the adverse excursion add-on independent of the others. Okay? Now, if I cover the entire position here, I break even on what I sold here. I make 10 to 12 ticks on what I sold here. So I still have a small winner. If I cover what I added here, my adverse excursion add-on, I make 10 to 12 ticks on that, and now I remain short on my original position from right here. So again, it's kind of similar to dollar cost averaging, but it is done inside of a strategy. A, I have a reason to get short here. B, that signal has a protective stop. C, I have a market moving against my position, so it's an adverse excursion as it moves into that static stop zone, and I got my sell signal right here. Again, these DSR levels aren't always going to be just dead on. So great little example right there of the adverse excursion. Anything I sold here, I cover here for about a 1-to-1 risk-reward ratio. Then I can maintain my previous position. If this market continues to sell off, my original position would have profited half here, and then we would have seen the additional rollover. So great example right there, static stop zone, but again, remember, it's based on a pure trading signal. Or mini Russell trade, okay, so again, it was more aggressive, so I came down to a single contract. If I'm a 2-lot trader right here, then we would have hit our target 1 at 150, or we'd be trailing stops on that single contract. So got a nice little pop right there. I'm going to see if we can retest these highs, possibly go to new structure highs. So great example right here. Here's our pullback in a bull trend. SOS 1, oversold. Turning point, black tip, white candle. There's the aggressive entry. Here's the retest on bullish divergence. Scalper out, let the balance run. All right, gang, let's take a look right here. Now, again, we've banged up against this target a couple of times. No target attained. I'm going to pull this down, take partial profits there. Still leaves us long half of the position in the mini Russell. Big directional movement. Now we're sucked back down into about a 4-point range. So we'll see if we get some type of a breakout here either way in these indexes. Dow Jones rolling sideways. DSR levels down here, 16,805 to 810. DSR resistance, 840 to 45. Obviously, this guy right here just hanging out sideways, top left-hand side. Crude oil back. Now we finally filled the gap in crude. So could be some low-risk opportunities up here at the 0570. So again, just remain patient. Small profit there on the Russell on half. We'll see if the balance can go back up, retest the highs of the day. Closer to a ratio trade, so let me just knock this out for you real quickly. Swing low that preceded the drive to this new structure high right there. All right, so you know we've got a 618 Confluence with our 1175 handle. Number two, take the swing high right here that preceded this decline. Potential outside return here. So let's go ahead and use our Fibonacci retracement. From the swing high at A, pull down to B right there. Outside return, the B to C leg might come in at that 618 or 786. Okay, so if it does, then we'd anticipate the AB duplicates itself here at the BC, and that would project lower to the 1174.75. So this could be a ratio buy signal right here. Keep our eye on that as well. Higher time frame. Okay, so basically HTF. So higher time frame, 1250 tick. Identify key price points. And again, gang, we're working off of structure. We're looking at levels where the turning point black tip showed a high probability turning point. Then we're going to look for a retest of those levels. The trading time frame, he walking through the 150 tick chart, and then he's going to take action based on qualified signals at those levels. Very, very simple. We've been drawing in black lines to identify those areas, so we've got that visual reference. Exactly. So HTF, TTF. Now again, remember, the 150 tick chart will generate more qualified signals. So if you like frequency, then you can stick right here. If you prefer fewer trades, some of our clients, for example, we've got a 377 tick. Max Saney's trading the 377 tick. And then I've got other traders that only trade the 1000 tick. So the 1000 tick, for example, their chart would have the 1000 tick here for, let's say, the S&P. Then maybe gold right here, and then crude oil right here. It's much easier to obviously watch all those markets and manage those trades. And on average, maybe 10 to 12 signals a week. So again, less frequency. So if the 150 tick is too overwhelming for you, then slow things down by increasing your time frames. All right, crude oil back into the 106.10s. Let's just take a quick look here at crude. I've got a big black horizontal line there telling me it's a key price point from a higher time frame. All right, so here's our big DSR level. This is the 610 tick chart. Look left. See this area right there. So this is 106.20s. So we've got a turning point black tip. What happened after we saw this cluster 3 sell? Okay, the short entry occurred at basically 610. The market declined here to 530. So there's an 80 tick move for 800 bucks. There was our low right there. So right when we hit 110% ATR, we stopped on a dime. There's a V bottom and then straight back north. So right here we're rallying back in. Let's move this up to the 0620s. So that's just a quick reference guide for us to identify those key price points. And again, we can pull this in from the higher time frame. Yeah, you are, Adrian. So that V bottom occurred all time frames. So the 60-minute chart would look exactly like that. Perfect example of a V bottom. Again, we made a new structure low, stopped on a dime right there. Yeah, we came in just shy of our analysis, which was the 105 to 105.4, and we came in at 105.10s right here. But again, one of the key things to keep in mind right here, gang, is that we hit that 110% ATR. All right, so now here's a spike high right there. So if I'm a swing trader and I get a qualified sell signal, my stops have to go above that swing high. A reasonable expectation on any shorts here would be back into the 105.20. So we've just covered 100% of the sell-off intraday. All right, now at the same time, bottom right, I don't have a DSR level here on crude oil, but I can still watch for a turning point black tip and then basically an SOS 4 or 5 double top sell right there. Okay, RSI overbought, SOS 1. Where's the market relative to? DSR level, SOS 2. Structure, SOS 3. Now this is the first test, so this is the left side of a potential double top. Okay, so last time we saw the move here. Now again, you have to use bigger stops. Here's an example. There's the black tip buy. Here's the double bottom at a DSR level at 520s. Long entry right there in crude oil. Yeah, so even the 18 tick stop easily held. Stops would have been below the 105 handle right here. Again, we went to 105.10. So you see on the 610 tick, we have less activity. So far for our day session on the 610 tick, we've had one buy, 18 tick target hit, and then we'd still be long covering the balance right there. So one signal on the day. And then right here, if I'm aggressive, I've got half of my position already short here. Stops are above the swing highs up here, so about 32 ticks of risk. And then I'd be looking for a potential double top right there. So if you're trading the 610 tick chart, you bottom right here on the double bottom. Yeah, your plus 18 on your scalper came in right there. And then you're trailing on your fib dots right here. You see the value of the fibs right now is at 106. So you'd be at 106 even minus 2, which would be 105.98. So you'd be locked into around $700 on the second half. Now again, keep in mind, it's going to reduce the number of qualified signals. Yeah, and then on the S&P 500, I built out a 1,000 tick that you could watch on the S&P. Again, higher volume in the S&P 500, smaller trading ranges. So the 1,000 tick is a decent chart to trade there. All right, now here's that adverse excursion add-on. Okay, so remember, we bought those down here. Pops right here. If we get a retest, now I can take my adverse excursion add-on out right here for about 70 or 80 bucks. The balance of the position remains long. And again, that covers part of the protective stop on the balance of the trade if I get stopped out. If we break above this structure high and close above, okay, so see we hit our target, it canceled the opposing stop. Now again, if I want to add that back in, go check my ATM. I can risk 12 to make 19. I'll take the absolute swing lows right here, and we'll just place a buy limit right there. And there'll be plenty of times here, traders, where, in fact, I'll go a little bit lower. The market will base right here, and it'll take a while to base. So here was our oversold lower high bullish divergence. There's our buy. Here's a retest. And you can see from 450 to 540, there are little $80 to $100 moves inside of that. Now, again, that's a 150 tick time frame. Yeah, so it's significantly smaller, but some of you really like that scalping activity. So here was the left side or the setup side for the buy signal in crude. The market comes up, pulls back down, and then right here's the right side or the signal side in crude. So at 8:30, 8:45, we get the buy signal. Market moves against us, does not stop us out, and then rallies, hits target 1, and again, trail stops would be below the fib dots. So a 2-lot trade right here is locked into a minimum of 900 bucks, maybe 1,000. Now, the opposite is occurring right here. Here's the left side. So this is the setup side for the sell. We're overbought, higher low, bearish divergence. Beautiful visual right here. So again, this is one of the classic trade signals. We want to see confirmation, which means we like to see our DSR levels and other key price points. Now, how can we enter this trade? A, I can sell it at market. Okay. B, I can use a favorable excursion short entry, which means the market has to double top, and then we need to see the sellers come in and drive it through the swing low right here that exists. So take a look. Every one of your winners on our base double top, double bottom signal, come down here, grab your triangle. We did this day one. Here to here to here. What happened to the swing high here? Notice price penetrated it and we had a momentum move straight north. Now here's the double top that's formed right here. There's the swing low, there's the double top. So every winner that I have right here, the market drives through the swing low that exists right there. So if I want to place a trade, I could come over here, put that in the swing trader, do a 2-lot. Okay, so I'll come down right here, and I'm going to use one of my bigger, so I'll go 22 by 22, and then we can go sell market. Now, more of a swing play, so immediately I want to check a couple of things. Number one, note right here that my stops are below this 106.50. That big black line represents structure resistance. Okay, so I need to make a decision here. Am I going to do this for a swing play and increase the risk on that position? If so, then I got to come up here and I'll go 56 and 57. So those are associated orders. So basically I'm risking 35 ticks. I want to be able to make 35 on my first half. So from 15 down here, we'll look at around 71. Actually, I'll put it right at this structure right here. So 106 down to 581, that's 19. Plus that 14 is 33. So that's about a 1-to-1 risk-reward ratio, and it's respecting this structure. Now, the other piece of this trade, I'd look for it to come back down to retest these lows. The lowest low right there is 10, so I can set the balance right here to around 26. So a retest of this key price point obviously pays 2-to-1 on my risk right here. Okay, so let's tighten the chart down again. Look left. I'm respecting the spike high that occurred over here on the 18th in this contract. Now, the other way to trade it, I would not be short right here. Instead, I take the swing low right here that exists, and I would put my sell stop right there. That's going to require additional confirmation. So the market has to come up, double top, then roll back over, and the sellers have to take it back over to drive the market through that swing low that exists right there. Okay? Yeah, you got to give these a little bit more room. Obviously, again, higher time frame, but it's equal. If we give it more room on the sell side for the protective stop, then we look for equidistant targets, and we're still at 1-to-1 and 1-to-2 risk-reward ratios. The difference. Okay, so what he did was he was long down here, higher time frame trading at the key price point we identified earlier. Was patient, closed everything out up here for plus 75 ticks, so he's done. Okay, now he'll just look for a qualified sell signal up here based on rules of engagement. And again, take a look left. Bull move right here. Ever since we saw all the stuff that's gone on in the Middle East the last week and a half, 2 weeks, crude has been on a bull move, a bull rally. So again, all he did was bought this pullback right here to this key price point we identified earlier in the week. And with that, he's trading with the other underlying trend, anticipating a retest of the highs and then a potential move to new structure highs. Well done. So in the trading plan, you just say, look, I trade with trend at key price point levels. That's it. Very, very simple. But that's 75 ticks, 750 per contract, remaining patient.